All right, welcome back to Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy, going through the prices here for you. Let's see if we've got any. We were up about 2.5 cents in corn. Let's bring that board up and see if there's been any change today. It's been a kind of a quiet day. We've actually come off just a tad. We've given back a penny here a bit, so we're at 1.25 cents higher in that March contract to 443.5, a penny and a half off the high of the day. We've got May up a half cent, 2 ticks to 454.25. So there you go. Not a lot happening over there, folks. Look at SEP. Sharply unchanged at 467.75. If we move over to the beans, let's see what we've got going on over there. Well, we're lower. Front month March, that's unchanged, sharply unchanged at 1205.75. While May's off a penny and a half to 1216.75. And July is off 2.25 cents. So not a lot going on right now, folks. July stands at 1226. So we'll move over to see if we've got anything going on in wheat. The Chicago wheat market's up between a penny and 3 cents, right? 3 cents higher in the front month March to 585.5. That's a new high. There you go. That's something we're celebrating. And then we got May up 1.75 cents to 596.25. And that too is a new high. That's wheat. Not a lot going on, but we're on the high of the day. How about that? We'll take it. From Chicago wheat, let's go to the Kansas City. We got a 12-cent rally there to 606 even. That too is on the high. So not bad. Wheat kind of keeping a constant here. We got a 10.5-cent rally in the May, 609.25 last there, and that too is on the high of the day. All right, that's good. Well, let's see if we can make it 3 for 3. From Kansas City, we go to the spring wheat in Minneapolis. 690 is last. That's up 9.75 cents. That's good. It's a good gain, but we are only a penny and a half off the highs there, so we're not playing the high game, right? May is up 7.75 cents to 698.25, and that too is a penny and a half off the high of the day. So wheat's all trading strong here as we go into the noon hour in Central Time. Let's take a look at cotton. We'll get to our next guest analyst. 67 points higher in cotton. That's the March contract to 82.37. And that's going to be, so it's 18 cents off the high of 18 points off the high of the day. Let's bring in our next guest analyst. That's going to be Tommy Grisafi. He's with Advanced Trading. He's in Bettendorf, Iowa today. Tommy, thanks for being on. Anything jump off the page that we talk about those prices?
No, except for the tire company should be sponsoring me. I should have like NASCAR stickers all over the little car for all the traveling I've been doing
right now. Yeah, right. No kidding.
Yeah, I'll tell you one thing. When I did make it to Wilmer, Minnesota yesterday, right before I went on stage, these farmers bum rushed me. And I thought they were coming over to tell me how great I was. It didn't go like that, Scotty. They were telling me how great you were. They said, right. We love you on Scott the Cow Guy show. I go, seriously, Scott who? And it was fun. They do watch and they are listening and they are very concerned about the price action. So what I did talk to the farmers about yesterday was that you're not going to believe this, but the market break in corn, wheat, beans, that's not scaring me nearly as much as you not taking the pencil. Just for those of you at home, this is a traditional pencil. For those of you not taking the pencil of how much it's costing you to operate your business, whether it was the gal in the crowd who asked what I thought about cattle, I said, well, this is what I know about cattle, and I also know this. It's never cost you so much to produce that pound of beef. Real quick, we're going to talk a little bit, and then we could go on break, but what I explained to the crowd was this. I bet y'all thought you were really good at marketing 2 years ago when, number one, we had a hot positive basis in the upper Midwest. Number two, we had inverted spreads. For that, those of you watching at home, you home gamers, when they'll give you $7.50 for your corn now, or you could wait 6 months and get $7 for your corn, we had a hot basis, hot spreads, and in a futures market that was on fire due to Putin invading Ukraine. It's very seldom in a professional grain trader's career that you have all three of those, and that is a pure ticket to making profit. Now they have the exact opposite of that. They have a poor basis, big carry in the spreads. It could get bigger. And we have a push down futures market, and they feel like they've been wronged. I told them all, if you took an IQ test 3 years ago, you took one 2 years ago, you took one this year, your IQ hasn't changed, and your ability to market grain hasn't changed. You just experienced one of the hottest cash trades in history, and you thought you were good, and now you're just back to who you are. It wasn't, I might have hurt a few feelings, but that's okay.
Well, I mean, yeah. Well, the truth hurts, right? Sometimes the truth hurts, but also, Tommy, I think that with a lot of those producers out there, and this happens to me every now and again, you know, they were undersold, just naturally undersold, because they were used to those higher prices. They have, it's called there's actually a term called short-termism, right? They thought that what the prices they just experienced were going to continue. But on top of that, these hybrids outperformed. We all thought there was some bad weather, hot and dry in July and August or whenever that was. And so you were already kind of undersold on what you thought you were going to produce. And boy, oh boy, your hybrids came through and gave you even more. So now you're really undersold. I think that that's a problem. And I think that any rallies are going to be met with some decent selling. What do you think?
Very correct. But the problem is that they're massively undersold in 23. That stopped them from doing anything in 24. Now, I have a whole book of business of people who have some decent 24 hedges. When I say a whole book, let me just be perfectly honest. If I work with 100 clients, 25 feel good about what they have in 24. That means they paid us, a professional person. That means 3/4 of my book wishes they were hedged more in 24. They had the chance. I asked them. I begged them. They still didn't do it. Ultimately, they are president and CEO, and they have to make the call.
That's right. All right, we're going to go away. We're going to pay some bills. Don't move. We're going to come back and talk more with Tommy about livestock after this. All right, welcome back to Market Day Report. I'm still the cow guy, and that's what we're going to look at, some cattle prices. Where this, Jackie, you got to bring them up, right? Be rude not to. How about live cattle? Let's take a look at what we've got going on over there. We've got a decent rally. It's gotten better every time we look. Feb's up $1.90 to 175, even 7 cents. 3 ticks off the high of the day. April's up $2.25 to 177.87, and that's a dime off the high of the day. Let's go from live cattle to feeders. Feeders also posting some decent gains. Look, we got a 3 in front of it there. We got March up $3, 232.77 is last there. And we got a $2.72 rally when it comes to the April to 237.92. Let's take a look at lean hogs and see if they've got something in store for us as well. I'm going to call that mixed, but we're more down than up. We've got a Feb board down 32 cents to 71.12. We're 42 cents higher in the April to 78.40, and we're sharply unchanged in the May. How about that? 83.95. Let's get back to our guest analyst, Tommy Grisafi. He's in Bettendorf, Iowa. Tommy, thanks for sticking around. What do you think about these livestock prices?
I'm loving the price action we're seeing in the cattle and the feeder cattle. It's nice. I mean, what a washout that was. That just shows you if you're going to be involved in futures or options, or if you're going to sell put because you're going to love if we get down to that level and you're going to love being long, you may become long. So something you sold for $2 or $3 may cost you $13. The question is, do you have the what's a way of saying it? Do you have a full understanding of what happens when volatility explodes? So anytime you sell an option low volatility, for example, grains right now have extremely low volatility. If someone sold a corn call right now because they've just given up on life and thinks corn can't rally, when markets get volatile like feeders and live cattle do, those option markets and futures markets whipped people, and we are finally calming down. We are definitely breaking out to the upside. Looking at June, cattle approaching 175, feeders are up 300. Hogs are trying to trade up, but not so much. The meat sector is making people feel better. And, you know, Scott, they can buy incredibly affordable meal and corn to produce that protein. Yes,
all right,
sir.
brother.
Helps tremendously.
Awesome stuff.
Thank
Really
you.
appreciate you coming on. Great content. Tommy Grisafi, he's with Advanced Trading. Great friend of Market Day Report and the Cow Guy Close. Thanks, Tommy, for being on. We'll bring it back to you.
Thank you so much.